to give a quick morning update, Monday morning update on how the pairs are doing from last night. So we ended up entering AUD JPY in gold and Euro GBP. So let's go ahead and go through these and see how everything's going. Bianca, good morning. All right, so AUD JPY, this is the reason that we entered, guys. I love this pattern. All right, you guys are going to see that we trade this a lot. All right, so you guys know what this is. This is our W, and this is also our harmonic. So our target would be here. And then, so we have three options, guys. We can buy here, sell here, or buy here. All right, so this is usually the way that we trade. And so we did three things. Bought here last week, and then we had a break above, and this is where we entered yesterday. All right. Actually, my bad. It was actually on this one. We had a break, retest. I saw the M inside the W. Do you guys see that? Let me know in the chat if you guys see what I'm saying. We have an M inside the W, right here. All right, easy continuation. And so we're going to see the same thing. The target is the midpoint right here. So then price will continue to do stuff like this. Down, continue. You guys see this? We just have break and retest, where the support zone became the resistance zone. Or sorry, the resistance zone became the new support. We had a break and retest off of the moving average, where we had this harmonic, and then we have an M. We have a bullish harmonic inside, we have a bearish harmonic, and this is the target. So we can see another entry right here at this point, and ride this up to our TP. All right, and then let's go through gold. Let's see where we entered yesterday. So we had this on the call. It was like, I think the price was still somewhere up here. And so I said that it was going to come down, retest the last zone, and we can buy it up. And so this is why we took partials this morning, because there was always a chance that it was going to come back down, do something like this, and then come back up. So when it came up just a little bit in profits, we put our stop loss and break even, and we took partials. Now it looks like it's coming back down to hit our stop loss or our stop profit. So at least that we took partials, so we're not in a loss. We at least walked away with some money. But the long side target for this is still pretty far. All right, we're still in this consolidation range. As soon as we break out of the range, we can buy on the break and retest, and then continue this up. And let me show you guys, we only have two more pairs that we're looking at. This is something that we're trying now, which is just sticking to a few pairs, because it makes things a lot easier to focus on and to keep up with. Let's see. So we bought Euro USD as well, right here. Off the break and retest, there was a bullish engulfing. This candle, bullish engulfing candle on the 1 hour, or on the 4 hour, excuse me. Now it looks like it's making this continuation harmonic. So we'll see how it reacts right here. But the easiest thing that we can do is just put a consolidation range around it, put a box around it, and then patiently wait for this thing to break out. So we still have our entry. I don't think we put stop loss and break even yet. It's still a little bit too early. When it breaks out, closes above this range and retests, then we can put our stop loss and break even and ride the continuation to the top of this channel. All right, maybe a little bit lower, somewhere around this range. Guys, so there's only three pairs that we're watching. The rest of the call, which is like the last 5 or 10 minutes, I want to give you guys a few really helpful tips that might help you guys during the week. All right. Getting your mindset ready and getting your mind right is one of the most important things for trading, honestly. So let me get my video up. All right. So this week, guys, I kind of put this in the chat this morning. I want you guys to focus really intently on trading without fear. So I know that a lot of people, especially when they're trading, they tend to have a lot of anxiety. And I know I had that for the first 3 or 4 months when I was trading. Aside from the first couple of weeks, which I was very confident in, the rest of the time, every time I entered a trade, I was very nervous because I had already lost money a few times. When you lose money and you're in that state of fear, you're not going to think as rationally, guys. So the thing that I want to tell you guys is when you're in a state of fear, you can't analyze the situation with a rational perspective. What that means is you always have to monitor yourself to see, am I trading from a state of fear? And that'll help you kind of start to trade in the zone. The zone is a state of no fear where you're fluidly moving in and out of trades. So last night, I entered a bunch of positions, a lot of positions, and they all started going a different direction. 15, 20 pips later, I just closed a bunch of them. Some of them even 10 pips later, I closed them. Because I wasn't going to stay to find out if this was going to turn back in my direction. Because I had some solid trades already lined up, and I know I was going to hold those for the long term. And so I take my losses really quickly, and I hold my my winners long. And I started to realize that, 7 or 8 months ago, it wasn't this easy for me. I was struggling to get in and out of trades because I'm like, okay, what if this trade turns around? What if this trade turns around? You can't really be thinking in that perspective, guys. If it's not going in your direction right away, then you kind of want to ditch it. You will know on the higher time frames. You will know when something is going in your direction or not. Honestly, it's pretty obvious. But when you're trading in a state of fear, you can't really look at it very simply, and so you tend to overcomplicate it. So this week, ask yourself, am I trading from a state of fear? And if you are, ask yourself why. Is it because you don't understand the pair that you're looking at? You haven't really you don't really remember what the markup looked like. You're kind of just trading just for the sake of trading. Have you risked too much money? Or are your expectations just not in line with reality? And so we always talk about your expectations need to be very focused on the random outcome perspective. And the random outcome perspective says that anything can happen in the market. And so don't get emotionally attached to any single trade. So right now I'm involved in 7 or 8 positions. Okay, we've only called out 4 for you guys. I have no emotional attachment to any of those positions. Any of those positions could turn against me anytime. I know the risk parameters that I've set, and I know the amount of money that I'm willing to lose on each one of those trades to find out. But I also know that if the winners start winning, I'm not going to pull profits out and and get out of the market. There's an opportunity there for me to make all of my money back. And if I have the mental fortitude to actually withstand the duration of that trade, I can actually take advantage of the benefits. So most traders guess the direction right. They're with the direction of the market. It's just about they close too many times and they enter too many times and they don't hold it long enough. And so they can't really reap the benefits for all the small losses that they close or the big losses. So this week, trade without fear. And trading without fear is having realistic expectations. And then the second part of that, once you start being able to rationalize the market very clearly because you're not trading with fear, now you can start to make really good decisions like adding into your winners and scale and just cutting out your losers. So scaling into winners and scaling out of winners is actually a lot easier than you guys think when you're thinking rationally. But when you're being succumbed by fear, it's usually hard to make that subjective decision. Guys, I appreciate you guys joining us. This was a really short call. We only have 3 pairs to look at. Keep an eye on these pairs. And actually, just as a bonus, I'll go through 2 pairs at the very end of this call, just to kind of give you guys a few more options. So it's USD JPY. We called this yesterday on the call. We said we were going to have a retracement and then a sell. Price retrace, and then now we had a sell, and it's looking like it's making this small head and shoulders right here. So let's go. Depending on how the dollar is looking, we can trade this move. Okay, so the dollar is retracing right now. It's around the 96.86 level. So I've seen the dollar a lot of times, and so you normally around the 96.9 will have some rejection. It's a strong area of support and resistance and supply and demand. Okay, you guys can see a lot of accumulation happens around the 96.9. And so as price approaches here, hopefully we can see a sell-off to the downside, which means that UCAD and USD JPY will continue to the downside. Okay, you guys can see UCAD is sort of hugging my channel to the downside. It's sort of like, this is kind of really weird. We had a downside channel, it broke out of the channel, and now it's sort of riding the channel on the way down. I'm not really sure what's happening with USCAD, but let's go. USD JPY, we're still expecting a lot of the downside. Really good risk to reward. Okay, we had 0, 1, 2, 3. Actually, no, we haven't even broken this. We could probably see 3 right here, 4 right here, and then 5 to the downside is the final move. USD JPY, good long-term move. All right. And UCHF as well. UCHF, we didn't get this retracement like we wanted. It was a clear break out of our consolidation. This was on the call yesterday. But guys, we broke out of this range, this 4-hour range. And let me see what's happening here. So these USDs are looking great. Yeah, so we have 2 targets right now, guys. This bottom black line is our first target, which is only like a few pips away. It's probably like 10 or 15 pips away. And then the bottom side target would probably be 70 pips away. So guys, maybe a sell stop at the 98 psychological level, but 98 psychological, actually, I think I have an idea. So rejections, we know that rejections and retracements normally happen at psychological levels and key zones, key institutional levels, et cetera, et cetera. So 0.98, nice round number, nice key psychological zone. If this thing is breaking out and it needs to retrace at some point, maybe we can get a retracement here at the 98 psych, either to the top of this consolidation or hopefully to the top of this range, and we could see a sell-off. Most likely we'll only have a shallow retracement just because of how fast this trend is moving. And so we can just get a follow through to the downside. And we don't know, guys, depending on how the economy is going, depending on how the dollar reacts, this thing could keep continuing to the downside. We don't know. All right. The dollar fluctuates just like all currencies, so we can continue to see the fluctuations like this. All right. Happy Monday, guys. Happy and safe trading. Thank God it's Monday. Go out and do something nice for somebody else, guys. Do some back testing. Make sure you guys are back testing your strategies. If you find yourself in the wrong mindset to trade, make sure you step away from the computer. Go get your mind right. Come back to the computer with an amazing mindset. Let's go ahead and kill it. Take it easy, guys. Oh, also follow us on Instagram at ChartAddicts. That's ChartAddicts on Instagram. All right, peace.